Every major trend in the market begins with silence. No fireworks, no headlines, no warnings. Just a quiet shift, invisible to most, but painfully clear to those who know what to look for. You see, markets rarely shout before they move. They whisper. And Jesse Livermore, he was the man who could hear those whispers long before anyone else. I remember the first time I stumbled upon one of Livermore's writings. He spoke of the line of least resistance, a phrase that sounded poetic at first, but the more I traded, the more it became a law of nature. The market, he said, always moves along the path that offers the least resistance, and recognizing that moment, the exact instant when the tide changes direction, was his invisible signal. To the ordinary trader, it looked like nothing. To Livermore, it looked like destiny. When I say the invisible signal, I'm not talking about a technical pattern or an indicator on your chart. I'm talking about a shift in character, the way price behaves around certain pivotal points. It's like the market taking a deep breath before exhaling in a completely new direction. Livermore didn't need RSI, MACD, or even volume profiles. He needed observation, patience, and above all, detachment. He watched for that moment when the market stopped reacting normally, when buying no longer pushed prices up or when selling suddenly failed to break support. That subtle disconnect, that was his signal. The moment before momentum. I'll be honest, it took me years to understand what he meant. Because as modern traders, we're addicted to confirmation. We want proof before action. But Livermore acted when conviction met intuition. He didn't wait for everyone else to see the move. He anticipated it. That's why they called him the Great Bear of Wall Street. And the irony. His greatest wins never looked obvious in the moment. They looked wrong. They looked too early. They looked invisible. Imagine standing before a still ocean. The surface looks calm, yet deep beneath, a massive current begins to shift. If you could feel that current, if you could sense it before it breaks the surface, that's the edge Livermore mastered. And that's what this story is about. Not signals from machines, but signals from behavior. Not trend lines, but tension lines. We're about to dive into the invisible rhythm that separates reactionary traders from true speculators, the rhythm Livermore lived by. Because when you can see what others can't feel yet, the market becomes predictable, almost poetic. Here's the cruel paradox of trading. The more desperate you are to see the signal, the more invisible it becomes. It's almost as if the market hides its truth from the impatient. And trust me, I've been there. That quiet moment before a trade, when every candle seems to whisper something different, your mind starts to create signals that don't exist. You want to see what Livermore saw, but what you're really seeing is your own fear dressed up as opportunity. That's the paradox. The market doesn't test your knowledge, it tests your patience. Jesse Livermore used to say, "The big money is not in the buying or the selling, but in the waiting." That line haunted me for years because I realized most traders, myself included, are addicted to motion. We think action equals control. We think if we're not doing something, we're missing out. But the truth? The market rewards stillness for more than speed. When Livermore watched a stock, he didn't look for confirmation candles or bullish breakouts. He looked for a shift in tone. Something subtle, maybe the way a stock refused to drop after bad news, or how volume suddenly dried up after a long sell-off. To him, that was tension building. The invisible signal forming beneath the surface. But to the ordinary trader, it just looked boring. They'd move on, open another chart, and start chasing something that moved. And that's where Livermore had his edge. He didn't chase. He waited to be invited. I remember one of my own trades that taught me this lesson the hard way. I was watching a stock consolidate for days. Tight range, low volume, it looked dead. So I moved on. 2 days later, it exploded 20%. I wasn't even mad at the missed profit. I was mad that I didn't feel the tension when it was there. I realized I had been staring at the chart, but not truly seeing it. That's when it hit me. The market doesn't whisper to those who are talking over it. You have to quiet the noise, the need, the urge to find something. Because when you stop searching for signals, that's when the real ones appear. Livermore lived by paradoxes. He would sit for weeks doing nothing, and then act with violent precision. Most traders can't handle that contrast, the boredom before brilliance. But that's the real art. Being calm enough to wait, but sharp enough to strike when it's time. He once said, "Men who can both be right and sit tight are uncommon." That was his paradox, action born from stillness. The greatest losses in trading don't happen on the chart, they happen in the space between two thoughts: should I wait, or should I act? That hesitation, that split-second war between discipline and impulse, is where most traders destroy their edge. And the cruel part? You won't even realize it until it's over. I sat there, staring at the screen, watching the market test a level I swore I'd wait for confirmation on. My plan said, don't chase. Let it come to you. But my emotions. They said, if you don't take it now, you'll miss the move. Sound familiar? That's the psychological trap Jesse Livermore warned about, the illusion of control. The idea that you can force the market to move on your timing, not its own. Livermore understood something most modern traders forget. The market doesn't care how ready you feel. It doesn't care about your research, your setup, or your watch list. The market will move when it's ready, not when you are. And so, the invisible signal, the one we talked about earlier, isn't just hard to see because the market hides it. It's hard to see because your mind creates noise around it. That's the real enemy. Not volatility. Not manipulation. Impatience disguised as intuition. Jesse Livermore didn't trade the market, he traded human nature. When you study Livermore deeply, you begin to realize something almost mystical about his approach. He wasn't obsessed with price. He was obsessed with behavior. Not just the behavior of stocks, but the behavior of people. Because in his eyes, every price move, every rally, every panic, was simply a mirror reflecting human emotion. Greed, fear, hope, and regret. The same for forces that ruled traders a century ago still rule us today. He said it best, the game of speculation is the same today as it was 100 years ago because human nature never changes. That's why Livermore could see the invisible signal. He wasn't trying to outsmart the market, he was trying to outweigh human emotion. Here's how he thought. Most traders rush into a trend because they want to believe they've found certainty. But Livermore waited for the point when the crowd had exhausted itself, when buyers had spent their last dollar, or sellers had thrown in the towel. That's when imbalance appeared. That's when the invisible signal took form. He would say, the market is never wrong, opinions often are. Meaning, if the market refused to go down on bad news, that was strength. If it refused to rise on good news, that was weakness. To him, this wasn't guessing, it was listening. Jesse Livermore didn't trade the market, he traded human nature. When you study Livermore deeply, you begin to realize something almost mystical about his approach. He wasn't obsessed with price. He was obsessed with behavior. Not just the behavior of stocks, but the behavior of people. Because in his eyes, every price move, every rally, every panic, was simply a mirror reflecting human emotion. Greed, fear, hope, and regret. The same for forces that ruled traders a century ago still rule us today. He said it best, the game of speculation is the same today as it was 100 years ago because human nature never changes. That's why Livermore could see the invisible signal. He wasn't trying to outsmart the market, he was trying to outweigh human emotion. Here's how he thought. Most traders rush into a trend because they want to believe they've found certainty. But Livermore waited for the point when the crowd had exhausted itself, when buyers had spent their last dollar, or sellers had thrown in the towel. That's when imbalance appeared. That's when the invisible signal took form. He would say, the market is never wrong, opinions often are. Meaning, if the market refused to go down on bad news, that was strength. If it refused to rise on good news, that was weakness. To him, this wasn't guessing, it was listening. Livermore treated trading like detective work. He'd gather evidence, study reactions, and then wait for the market to reveal its intention. When that invisible shift appeared, maybe in the way volume faded, or how a stock suddenly resisted pressure, he'd strike with full conviction. No hesitation. No second guessing. Because the signal wasn't on the chart, it was in the behavior behind the chart. And yet, he never trusted it blindly. He built rules around that observation, rules to protect him from his own excitement. One of his favorites was what he called their test. Before committing, he'd buy or sell a small probe position just to see how the market reacted. If it moved in his favor with conviction, he'd build into it. If not, he'd cut it immediately, no emotion attached. That was his way of talking to the market without speaking. It wasn't about being right, it was about listening to the response. Livermore knew that the invisible signal wasn't some magic pattern, it was a relationship between the trader and the tape. He respected that relationship like a sailor respects the wind. He didn't command it, he adjusted to it. And that's what made him one of the greatest speculators of all time. The year was 1907, the market was bleeding, panic was everywhere, and Jesse Livermore stood calmly in the middle of it all, waiting for a signal no one else could see. The financial world was collapsing. Banks were failing. The tape was printing red like a heartbeat under stress. Traders were screaming across the floor of the exchange. Everyone was certain the world was ending. And yet, Livermore sat silent. He wasn't looking for bargains. He wasn't looking for bottoms. He was looking for behavior, for that invisible moment when panic had reached its peak. He once wrote that the market never ends a move on reason, it ends on exhaustion. So while the crowd sold in fear, he watched. Stock after stock crashed through support. Then something changed. A stock he'd been tracking for weeks stopped falling. No news. No recovery. It just refused to go any lower. He leaned closer to the ticker tape, eyes narrowing. The volume was still high, but the price wasn't dropping. Buyers were quietly stepping in. Sellers were throwing everything they had, and yet, nothing. That was the invisible signal. The first quiet heartbeat of reversal. Livermore didn't rush in. He tested it, bought a small amount. The market didn't punish him. It rewarded him. He bought more. And more. Within days, the market turned violently upward, a relief rally that few saw coming. While others were still frozen in fear, Livermore was already in position. He made millions during that panic. Not because he predicted the end of the crash, but because he recognized the behavioral shift when exhaustion replaced fear. That's the essence of the invisible signal. It doesn't scream. It sighs. And only the trader calm enough to listen can hear it. Fast forward to today, and the story repeats every month. A crypto sell-off that should continue, but suddenly stalls. A tech stock everyone says is doomed, but refuses to break its low. The signal is always there, just hidden under emotion and noise. Livermore didn't need the internet, charts, or social media hype. He needed observation, detachment, and courage to act when silence spoke. And yet, that moment of silence, that invisible calm, is where most traders fail. Because it feels wrong to buy when everyone's terrified. It feels insane to hold when the crowd is celebrating. But that's exactly where Livermore lived, in the gap between human emotion and market logic. That's where he found his fortune. And that's where most traders lose theirs.